Right. 5.2. 5.2. Packer suitcase shop. Packer suitcase shop. Packer suitcase shop. Charles Packer sells travel suitcases and the year end is 30 June 2018. And 5.2.1 calculates the value of the closing stock on 30 June 2018 using the first in first out method for 5 marks. 5.2.1, we want to calculate the value of the closing stock using first in first out. When you are calculating the value of the closing stock using first in first out, you must know and that you need to start from the bottom, because according to the first in first out, the oldest stock is sold first. So whatever that is left will be something that was purchased on the last day, because the oldest stock is first in first out. So if you look at the closing stock here, the total number of units in the closing stock, we have got 496 units. We have got 496 suitcases in the closing stock. And this business is using first in first out, which means that the opening stock of 420 had to be sold first before they go into the purchases. The purchases, 850 was sold, 980 was sold. But when you are calculating the value of the closing stock using FIFO, you must start from the bottom, the last stock that was purchased, because it will be those items that will be left according to the first in first out. And if you are told that you are left with 496, the last stock that was bought was in June, and the total number of units in June stock was 450, and there was returns from June purchases of 25 units. So it means that in June we are only left with 425, because it was 450 and we are told to see the returns, and the returns was 25. So 450 minus 25, that's 25, and the unit cost for June stock is 3,040. 3,040. So 425 multiplied by 3,040. 425 multiplied by 3,040 equals to 1,292,000. 1,292,000. That's 1,292,000. 425 multiplied by 3,040. That's 1,292,000. So then we need to go a little bit up now to March stock, because we still want to get the 496. There is 496 in the closing stock. So we have managed to get in the last stock 425. How many units we need now? 496 minus 425. It's only 71. So from March stock we are going to take only 71 to make 496. So 425 plus 71 will give you 496. And what is the unit price for March stock? It is 2,930. The unit price for March stock is 2,930. 71 multiplied by 2,930. 71 multiplied by 2,930 equals to 208,030. 208,030. $71 multiplied by 2,930 equals to 208,030. So 1,292,000. 1,292,000 plus 208,030. 208,030 equals to 1,500,030. 1,500,030. So our value of the closing stock, value of the closing stock according to the FIFO method, our value of the closing stock is 1,500,030. The value of the 496 units in the closing stock is 1,500,000. 5.2.2. 5.2.2, it says Charles suspects that all suitcases have been stolen. Charles suspects that suitcases have been stolen. Provide a calculation to support this concern. So there is a suspicion that some of the suitcases have been stolen. So let us then calculate all our items that we are having on stock. In the opening stock we had 420. We want to calculate everything we had now so that we can be able to establish whether this concern is true or not. So the opening stock, we had 420 in the opening stock, and we bought purchases 3,155. We bought 3,155 minus 25 that was sent back to the supplier in the form of returns, minus 25 minus 3,050 less 3,050 equals to, let's just start by calculating that how many suitcases are we supposed to be left with. We had 420 suitcases in the opening stock. We bought 3,155 suitcases, and out of the 3,155, 25 was sent back to the suppliers in the form of returns, and then we managed to sell 3,050 suitcases. So let's check how many suitcases are we supposed to be left with. 420 plus 3,155 minus 25 minus 3,050 minus 3,050 equals to 500. We are supposed to be left with 500 suitcases, but according to the closing stock we have only 496 in the closing stock. Minus 496, 500 minus 496, that is giving us 4, equals to 4 that is missing. So this concern is true. Charles is concerned that a number of suitcases have been stolen. Provide a calculation to support this concern. So this calculation is proving that according to the calculation we are supposed to be having 500 suitcases in the closing stock, but the closing stock is revealing 496. So it is very clear that 4 suitcases have gone missing. So 4 suitcases have been stolen. And then the last question on this Packers suitcase shop, the last question here, which is 5.2.3. 5.2.3, it says Charles is concerned about the volume of stock on hand. Calculate for how long his stock is expected to last. That is A. His closing stock, remember, is 496, and this business is able to sell 3,000. This year we have managed to sell 3,050 in the whole year. So that's 496 over 3,050 multiplied by the number of days in a year. You can be able to tell how long will this 496 units in the closing stock last. So 496 over 3050 that was sold in the whole year multiplied by 365 equals to 53,3.5 or 59 or 59.35 or just 59.4 days. So this question which says calculate how long his closing stock is expected to last. His closing stock is expected to last for only 59 days, 59.4 days, which is roughly 2 months. Because the 496, if you look at the total sales for the whole year is 3050. So it means 496 can be sold on average of like 2 months. 496 divided by 3050 that was sold multiplied by 365 days. Yes, that's 59.35, which is 59.4 days. And we need to state one problem with keeping too much stock on hand. One problem here with keeping too much stock, the stock can become obsolete. It's dangerous to keep too much stock on hand. Stock can become obsolete or stock can become outdated. It's dangerous for a business to keep too much stock. That should be noted. We should not keep too much stock on hand, because if that stock become outdated, then we cannot longer be able to sell. And lastly, one problem with keeping insufficient stock on hand. Another problem now of keeping insufficient stock on hand. You may not be able And then lastly here under Packer's Suitcase Shop, we were asked to provide one problem with keeping too much stock. We said stock can become outdated, they can become obsolete. And one problem with keeping now insufficient stock on hand. One problem with keeping insufficient stock on hand, stock may not be able, we may not be able to meet the demand for customers and lose them to other businesses. If customers come and want to buy something from us and there is no stock, then those customers, we will lose faith from them and they will then decide to go and buy elsewhere. So it is important that we keep enough stock available for customers to buy, but also at the same time we need to be guided that we need not to keep too much stock, because it may then become outdated and then we end up not being able to sell. So it is very important to have our calculations correctly so that the stock that is available for sale is the stock that is enough. It's not too much, it's not less, it's just enough stock to meet the demand for customers.